All right. Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. It's going to be a very interesting day today. Today will be we- the Wednesday, the 5th of November 2025. Very good morning to all. So before we kickstart our Daily Dose, let's have a quick look at the disclaimer first. All right. So I hope that the screen is working. It seems a bit slow. Okay, give me a minute. Yeah, I think it's out. All right, good. So leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right. Okay, so let's get kick-started of what has taken shape yesterday in terms of price action, which is very interesting, and as across the global markets, that means i.e. from the stock indices, from the FX, and as well as the two key commodities that we cover, which is gold XAU/USD and the West Texas crude oil, and as well as their respective relevant news flow and or economic data that has an impact on their respective intraday price movement. So yesterday was a risk-off day in the US stock market. So this risk-off day give a bit of fear that when it starts to trigger off a systematic, more pronounced sell-off. So let us examine that in greater detail first. All right. So let me share with you the performance of the US stock market yesterday. So the performance of the US stock market yesterday was all of them are in the red. But what's interesting over here is that the Dow Jones Industrial Average, yes, it closed down, but it's not as drastic as the other three major US stock indices. So the Dow Jones Industrial Average down negative 0.5%. The worst hit was the Nasdaq 100, which centered on the mega cap technology stocks that has a much more highest significant weightage among the four major US stock indices, down by negative 2.10%, 2.1%, and the SPX down by negative 1.17%, and followed by the Russell 2000 down negative 1.8%. All right, and the primary driver on the weakness on the Nasdaq 100 is driven by overvaluation concern pertaining to key players within the artificial intelligence AI optimism team play. So what do I say by that? So yesterday we see a pronounced sell-off in the mega cap technology stocks, especially centered in on the AI optimism play, where we start to see a slew of red in deeply in the semiconductor industry within the technology sector. So we know that AI is pretty much dependent on semiconductor chips, especially those higher end GPU processors like NVIDIA. Okay, give me a minute. Yeah, NVIDIA, which is down a whopping negative 4% over here. And what actually kickstarted this sell-off in the semiconductor sector within the technology we call it industry in the US, or the technology sector in the US, was caused by this Palantir share price and as well as AMD share price. Okay, let me talk about Palantir. So Palantir, also what's interesting about Palantir is that they actually beat earnings over here, but because of valuation concern, and there's this celebrity, previously there's this one of these the great big shot during the the subprime financial crisis in the US in 2008, 2009. There's this guy called Michael Berry. So he actually disclosed bearish wagers on Palantir and NVIDIA, buying Palantir put option that increase in value as share decline. So that actually, because of this celebrity star power, created this kind of negative feedback loop into the US stock market yesterday. And also Palantir share price dropped by 8% on concern about the company valuation, despite the fact that Palantir revenue increases to 63% to 1.18 billion, topping analyst estimate. So this kind of selling is a bit of what I call indiscriminated selling, whereas we see a bit of sentiment trigger, and that created a kind of negative cascading impact on the share price of Palantir, which Palantir is also part of this AI optimism team play that trigger a tremendous negative feedback loop into the US stock market, especially those indices that are heavily geared towards technology stocks, which Nasdaq 100 is one of them. And uh, earlier this morning, AMD, all right, so AMD also reported their earnings, which is the smaller boy of NVIDIA. All right, they call it the cousins or the smaller cousin. So the thing about it, the company share price fell more than 3% in extended trading. That means in today's early Asia session over here, despite the fact that its CEO give a rosy guidance saying that the AI business will generate tens of billions of dollars in annual revenue by 2026. And the market for AI processors, which is the GPU, which is in competition with NVIDIA as well, because NVIDIA is being the top tier one processor, AI processor, whereas AMD is either the second and the third tier AI processor. That part saying that the AI processor market could generate revenue of more than 500 billion a year. So basically what they give over here is that they give a rather a guidance that actually surpass consensus estimates. 9.6 billion, right? The fourth quarter revenue is expected to come in at 9.6 billion, so this is forward looking. And on aggregate, the median sell side analyst estimate to be 9.2 billion, so that's actually above expectation, right? But despite that, rosy guidance coming out from AMD that also managed its Q3 earnings also managed to beat expectation as well. So if you look at its blah, 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 over here, yeah, third quarter sales rose to 36% year on year to 9.25 billion, beating 8.6 billion average estimate. All right, EPS, profit per share, came in at $1.20, also slightly surpassed analyst projection of EPS 1.17. So despite this earnings beat and as well as a healthy forward a positive guidance by the management of AMD, but that failed to actually we call it offset that negative feedback loop that was seen in the US stock market yesterday, especially centered on the mega cap technology stocks, creating a indiscriminated selling across the board, okay, despite the fundamentals are okay. All right, so now let us now dive into the deeper picture, because we know that every time then we start to see this kind of significant sell-off in the US stock market, we start to get concerned that it starts to lead to a 2008 2009 systematic sell-off. That means we start to see a very steep bear market where everyone in the US stock market got hit due to a systematic risk. Okay, what about systematic risk? Systematic risk is due to what I call a potential, we call it a frost or freeze in the US financial sector where liquidity gets dry out. So in order to look at the risk of a systematic risk or a contingent of fear in the US stock market, or a contingent sell-off in the US stock market caused by systematic risk, is look at the performance of the US financial banks, the key financial banks. So very interestingly, if I look at the heat map of the S&P 500, I say the banks are not badly sell-off yesterday. So if you look at JP Morgan, closed almost unchanged. Bank of America also almost unchanged. Wells Fargo negative 0.2%. Okay, the worst hit was Citigroup, down negative 0.6%. So these are universal banks that involves wholesale lending, consumer banking, and as well as corporate banking over here. All right. So the next one to look at over here is very interesting, is that investment banks. So investment banks are those guys are doing M&A deals. All right. So if there is going to be a systematic risk in the US financial sector, these investment banks will also get badly hit as well, because mergers and acquisition will be on a decline. But however, yesterday despite that sell-off in the AI related mega cap technology stocks and its second tier stocks like Palantir and AMD, Goldman Sachs managed to rally yesterday at 0.7%, followed by Morgan Stanley as well, another investment bank, US major investment bank, closed marginally higher at 0.22%. Right. So if you dive deeper into the performance of these major US financial stocks, it doesn't seem to us that we are on the brink of a systematic sell-off slash contingent sell-off yet. So yesterday's sell is more primary focus on a bit of overvaluation fail, which is actually good as this valuation on this AI technology related team play stock get reset to a much more healthy level, okay, rather than a start of a systematic sell-off or contingent fear like the 2008, 2009 subprime crisis. I do not see it coming at that level based on the information that I'm reading right now over here. And because of Dow Jones Industrial Average over here has its biggest weightage stocks is Goldman Sachs. Okay, so how do I know the component weightage of the Dow Jones, the S&P, and the Nasdaq, the percentage? Because you can't find that easily on the web because those are paid services. Bloomberg Terminal, you're able to get there very easily. You can go to this website. It's a public free website called slickcharts.com. Not live, it's 1 day delayed. So you're able to get the component weightage of Dow Jones, S&P, and as well as the Nasdaq 100. So if you go on to the Dow Jones Industrial Average, what you could see over here is that the components weights, okay, because also bear in mind that there's also this advertisement as well that will start to flow up here and there because this being a free website. So the Goldman Sachs Group or GS Goldman Sachs, it has a weightage of 10.34%, followed by Caterpillar 7%, and Microsoft 6%. So Dow Jones' biggest weightage stock is Goldman, not Nvidia, not Apple, not Amazon, and not even Microsoft. 10% weighted into Goldman Sachs. So that actually explains why the Dow Jones Industrial Average didn't fall much yesterday, due to a much more positive outperformance on the US financial banks, which I shared with you guys, or US financial stocks, which I shared with you guys earlier on. All right, so that sum up the state of the US stock market. Now, let me move on to the FX market over here. So the FX market continue to see dollar strengthening because of that we call that that fear that the Fed may not continue its interest rate cut cycle into December and stretching into 2026 as well. So if you look at the CME Fed Watch 2, right, let's look at the CME Fed Watch 2. Okay, very quickly. A little bit for a while. Okay, let me reduce that in size. So yes, there's a lot of market chatter saying that the Fed may not cut in the December meeting, but what's okay? Let me make sure that it's refreshed over here. Okay, just 1 second. Yeah, good. So if you look at the target rate probability for the 10th of December Fed meeting, which is the up and coming one, based on the Fed funds futures trader trading behavior, okay, because all these are being implied by the pricing of the Fed funds futures contract, and this Fed funds futures contract is pretty much dependent on the trading activities of the Fed funds futures traders. So based on this latest pricing as being compiled by the CME Fed Watch 2 or computed by the CME Fed Watch 2, the Fed funds futures traders are still looking at a rather high probability, not very high probability, but a probability that still skewed towards a potential Fed rate cut in December, despite the market chatter saying that the Fed may not likely will not cut after Fed chair dosed down on that Fed dovish pivot last week during his ex-post FOMC press conference. But the Fed funds futures trading is still assigning a rather high odds of 75% not an odds, about 50%, 55% or 60%, but still a rather high chance. But nevertheless, it actually declined from 90% plus 91% last week. All right, so despite this, because of this huge decline in the odds over here, that drove that what I call over pessimism that the Fed will not cut. And because of this over pessimism that the Fed will not cut in December, that drove the US dollar strength yesterday as well, right over here. So that was 75%. So if you look at the aggregated tab over here, means for further months futures contract, market participants are still looking for 2 cuts right now to come in the 2026. All right, so the first cut will likely come in April, 29th of April 2020 FOMC meeting at a chance of 71%. Then thereafter it will come in the 16th of September 2026 meeting with a chance of 93% to bring it down lower to 3% to 3.25%. And also what market concern over here is that after that second cut that could come in the 16th of September or 28th of October next year, the Fed will start to remains on hold for the entire year of 2026 and also stretching into 2027, October 2027, where it starts to remains on hold at 3% to 3.25%. So that also created a fear that the Fed will start to be adopting a rather shallow interest rate cut cycle, right? So that is being priced into the Fed funds futures market right now. So with this pricing and this kind of expectation, not so pronounced Fed dovish pivot, that created the dollar strength to coming into the US FX market yesterday, where the dollar bounced, all right, in for the 1, 2, 3, 4, 5, fifth consecutive session, as it's now resting into this key medium-term pivotal resistance zone of 110 and 100. Oops, come on, let me remove this. Okay, 100.10 slash 100.5. All right, so right now it's actually hitting the upper boundary of this resistance, medium-term resistance zone. We also confluence with the falling 200-day moving average as well. And if you look at the fundamental one of the intermarket macro fundamental indicator that I tend to look will be the yield spread between the 2-year treasury yield versus the rest of the world. All right, so the 2-year treasuries spread versus the rest of the world actually remains in a downward drift over here. All right, so despite the bounce on the US dollar, the 2-year treasury spread against the rest of the world, which is the average of Germany, UK, Japan, Canada, Swiss, AU, and China, hasn't surpassed above the previous peak of 1.62% over here. And instead, they drifted downwards since last Thursday, all right, despite the fact that the US dollar index is going up. So what we could see over here is a movement that is against this intermarket fundamentals. So this push up in the US dollar index is more driven by the fear, the pessimism, the pessimistic fear that the US Federal Reserve, firstly, it may not cut in December, and also there's a risk that it could be a much more shallow interest rate cut cycle going forward over here. All right, so now next up I will share with you guys over here is that this negative feedback loop on the US stock market created a K-shaped performance in the FX market. If you look at the 5-day rolling performance, okay, let me expand this. So these are already shown you guys, which is the 2-year treasury yield spread versus the rest of the world. Okay, this is the 5-day rolling performance over here. So there's this K shape that has started to form, where the dollar yesterday was very weak against the Japanese yen, but whereas the dollar was strong against the currency that has a kind of a direct correlation with the performance of the global stock market, which is the Aussie, and the Kiwi, right? Indirectly put it the way that Aussie is a kind of a risk-off proxy. So every time we start to see a risk-off in the US stock market, using the US stock market as a global stock proxy of the global stock market, given it's also a significant weightage in the MSCI World Index, the global world stock index. Every time there is this risk off in global equities, the dollar would spike up the strongest against the Aussie, which has happened last night. And it also managed to drag down the Kiwi dollar as well, given that the Aussie and the Kiwi are rather close cousins in terms of their movement. But what's interesting over here is that the yen starts to strengthen significantly against the dollar, or the dollar weakens significantly against the Japanese yen. So the yen tends to be a much more so-called risk off risk a flight to safety in terms of this kind of risk off that's been seen in the global stock market. But let me share with you is that I do not buy this narrative. Why? Because the dollar yen is also driven more by a fundamental intermarket relationship, which is the yield spread between the 10-year treasury yield and the JGB yield. So what do I mean by that? So if you look at this particular chart, let me share with you guys. Is it open up? Yeah, this is the one over here. All right. So previously, I did share with you guys this spread before. Is at the 2.47 and 2.9. All right. So this is the 10-year US Treasury yield minus the 10-year JGB yield. And if you look at the movement of this particular top of the chart, the blue line, and this light green line, which is the shorter duration 2-year Treasury yield minus the 2-year JGB yield, they have a direct correlation with the movement of the dollar yen. Okay, very clearly, the blue line goes up, the green line goes up, the dollar yen also goes up. All right, over here. So once the blue line comes down, the green line come down, your dollar yen starts to drift downwards as well. All right, and it remains in a kind of a choppy movement since the high of July 2024. Right, so in the last one year plus, the dollar yen has been rather choppy. And why? Because the major uptrending movement of the blue line and the green line has flipped. All right, has flipped into a downtrend. Okay, so very clearly, we start to see the blue line breaking below a key support level on 29th of September, which is 2.47%. The green line, which is a more sensitive one, which is the shorter duration, the 2-year Treasury yield, that is more related to monetary policy stances of central bank for any 2-year government treasury bonds, or they call it treasury notes. All right. So what we could see over here is that the 2-year broke down much earlier on August this year, then followed by September by the blue line, which is the 10-year spread. So what it means that over here that the yield premium of the US Treasury, both the 10-year and the 2-year are getting lesser comparatively to the same duration of the JGB bond, which is the Japanese government bond over here, which implies that it should potentially reduce the strength of the dollar yen, which is fine, which it managed to do so this week at right exactly at the 154.50 for 154.45 50 medium term pivotal resistance where I share you guys, and also this descending trend line over here from the high of June 2024. All right, so that risk off scenario that is being seen yesterday is just only easier narrative for Newswire to actually publish it out for guys, for everyone, me and you, to have a easier understanding to read. But in fact, the underlying fundamental / macro factor is the real reason why the dollar yen starts to see a cap on its strength at the start of this week. All right, so this is the chart that I like to share with you guys, which I shared for a couple of times ago, saying that do keep a close eye watch on this chart, because this chart is a key fundamental slash macro driver of the dollar yield, which is the yield spread of the 10-year, 2-year US Treasury over the JGB. All right, it's the Japanese government bond. All right, now with that, gold continues to weaken over here. So I share you guys that for gold, where is gold price? Yeah, so for the gold price, ever since the bearish monthly shooting star candlestick on gold, we now are in the phase of this so-called much more medium-term corrective decline in gold to actually correct down. It's rather swift upwards movement that is being seen in the month of September and October. So that is still being in play over here. All right, so that's for the gold price situation, because much more driven by what I call that earlier leverage long position adjusted. All right, so if we are talking about fundamentals, right? Fundamentals, despite yesterday's sell-off in the stock market, gold as a safe haven should actually goes up. But why is it coming down? Because of the earlier overextended rally that has taken shape in September and October, and right now it causes a lot of late leverage long unwinding in the futures market for gold. So that's the reason why gold remains to be weak. And also from a technical factor, this week it fails to break above last Friday high, and also that 4,062 short-term pivotal resistance, which I highlighted earlier to you guys over here. All right, so now moving on to the oil price. So oil price continues to remain weak as well. So oil remains below the 50-day moving average, and that doesn't really change much given the fact that there is still a supply glut that is coming into the market for oil price. Later I'll touch on the revised short-term technical levels for the West Texas oil, given that yesterday it broke down our first support at that $61 per barrel. Now moving on to the Asia stock market. So Asia stock market also caught the bearish animal spirits triggered by the US stock market yesterday, where we start to see the Asia market close in the red over here. So all of them did rather badly over here, which especially the Nikkei 225 is down by -3%. But what's interesting is that I'll share the Nikkei 225 is actually at some support level to work out for. The Hang Seng not so bad, down -0.57% instead. So that so-called, let me push over here. So the Hang Seng, if I go to the Hang Seng over here, okay, okay, give me a minute. Let me hopefully can flash the chart. Yeah. So the Hang Seng managed to reverse off from its opening lower. So it gapped down, but managed to actually trade up higher from the current intraday lows. All right. And the China A shares, which is the CSI 300, down negative 0.13%, and is now trading at the session high, right? 0.13 or now 0.4%. So not really a kind of a systematic global sell-off in, not a kind of a systematic global sell-off, something that we akin seen to the 2008, 2009 subprime crisis, right? Despite we start to see some social media posts yesterday talking about such fear, right? So, yep, that sum up the first segment of the daily dose. All right, so now let me move on to the second segment. So the second segment of the daily dose will be the intraday technical outlook. All right, so that is more technical, short-term technicals over here. So let me go down to the chart, all right, of the FX market. So before that, let me expand my screen so that you guys could have a better view of the charts. Okay, starting the FX market. Okay, so for the FX market, the euro dollar Okay, broke down below 115.30, which I got to respect that over here. It broke down. So now there could be a residual push down towards 114.50, which is the swing low area of 1st of August, maximum 1.14 figure level, which is right exactly at the swing low of the 1st of August. So this is a swing low. Put away that the 1st of August key medium term swing low. Why this is a key medium swing low? Because after hitting 1st of August, it did a significant rally to hit a close to the highest point that was previously seen during July, September 2021. So take it as that is equivalent to a 4-year high at that point in time when it hit that level. So this is a significant medium-term swing low around the 1st of August. All right. So I'll be using the broken down key pivotal support previously 115.30 to have this to have this bearish bias on the euro dollar for it to drift downwards. So it's more like a residual push down towards 114.50 and 114 figure maximum. Only a bullish breakout above 115.30 will invalidate this bearish bias to see a recovery towards 115.55, 115.80 in the first step on the euro dollar. And now let me touch on the sterling dollar. So the sterling dollar was one of the worst hit, was much more weaker than the euro because it broke below it's below the 200-day moving average, below the 200-day moving average as well. And yesterday there was actually a surprise public broadcast. It's more like a budget speech by the UK Chancellor, which is the UK finance minister in a way, to discuss about the country financial challenges. All right, because in order to the need to tackle high borrowing costs, she actually laid the groundwork for in this pre-budget public speech. But this is not a real budget because the real budget will be announced in November. So she gave a kind of a pre-look as a guidance of what may happen in November. She actually laid the groundwork for potential tax hikes, blaming the previous conservative administration. So because of this fear of this tax hike, that could actually put a cap on UK GDP growth in a couple of months down the road, and that causes the pound to actually sell off yesterday, underperform the euro. All right, so if you look at the sterling pound technicals over here, so the sterling pound technicals, it broke below. Previously we were neutral between 131 figure and 131.80, so it broke below 131 figure level. So this 131 figure level will be my key pivotal support level, will be my key pivotal resistance level for today. Let me repeat again. The sterling dollar mic test. Hope that the voice is good. Test. All right, good. Okay, so the sterling dollar broke down below our previous lower neutrality limit of the neutral range at 131 figure level. So this 131 figure level will be my short-term pivotal resistance. We will flip to a intraday bearish bias. Next near-term support level to watch will be 129.70, 128.90. Only a bullish breakout above 131 figure level for the sterling dollar will invalidate the bearish bias to see a recovery towards 131.80 and 132.50 in the first step, which also confluence with the key 200-day moving average as well. All right, so that's for the sterling dollar. Next up will be the Aussie dollar. So the Aussie dollar, it drifted down, it broke below that 61.15 level over here. So that was my pivotal support. So despite the fact that RBA didn't cut interest rate, and also given that the Guardians that yesterday that they will be on hold for a longer period of time, so it didn't survive. The Aussie dollar did manage to bounce on RBA latest latest monetary policy stance, where the Australian central bank may hold interest rate for a period of time rather than continuing further interest rate cuts as they assess the external environment. So one of the reasons over here is potentially of the easing of the US-China trade tension as well. But however, the Aussie is being a proxy to global risk off. in equities. So given yesterday risk-off sentiment in the US stock market in general due to the sell-off in the various AI-related team play mega cap technology stocks created a negative feedback loop into the Aussie dollar, overshadowing the RBA latest monetary policy stance. All right, so that causes the Aussie dollar to sell off yesterday below the 65.15 pivotal support that we have. All right, so what we could see now over here is that the Aussie dollar drift down, hit 64.75, our next support level, and now coming very close to 64.45. All right, and now there's a bounce over here. All right, so with this bounce, and also what's interesting over here is that there is a bullish divergence. Okay, lower low, higher low on the RSI. So with this bullish divergence, my conviction for it to shape another lower low to test 64.45 and maximum 64.30, which is my key medium-term pivotal support level, which is the expanding wedge range support that has been in place since 23rd of April 2025 low. I'm not so convinced to have another push down towards 64.45. Hence, I'm not that convinced. I would have a neutrality stance for today, right now on the intraday basis. Okay, so neutral between 64.45. Okay, let me remove this. This level here, 65.05. Okay, if we do the Fibo retracement of this last push down, okay, that constitute the 30.2% Fibo retracement, and graphically was also the minor swing high of yesterday's European session and the start of the US session, where it tries to break above the European session high but can't break, and we start to see a sell-off throughout the US session across yesterday. So this is a significant resistance level as well, based on how the price action reacted yesterday during the European session and the start of the US session. Okay, 65.05. Okay, so this will be the neutrality zone to watch out for today, 65.05, 64.45. So a breakout above 65.05 will see a pushback up to retest the 65.30 level again. .6530, and above 6530 will consider yesterday as a bearish breakdown to see a recovery towards 65.60 next in the first step, which confluence with the 50-day moving average and the minor swing high of last Friday, 31st of October, and the minor swing high of this Monday, right, 65.60. So that's for the Aussie dollar. All right, lastly will be the dollar yen. So dollar yen, before I go into the hourly chart, just a quick recap. So this 154.50 is our key medium-term pivotal resistance level, where it got rejected since Monday over here. Right, this is the daily time frame chart. Now flipping to the hourly time frame chart over here. So the hourly time frame chart, the dollar yen broke below our first support level at 153.20. Right, so let me remove this over here. So I would actually push down my pivotal support, pivotal. I will push down my short-term pivotal resistance for today using yesterday's minor swing low, which is on last Friday's low, where it broke down, got rejected in today's early Asia session very closely at 153.90. So I will be having a tighten pivotal resistance for today as my short-term one, 153.90. So tighten my pivotal resistance to 153.90, maintain that bearish bias for the next support level to potentially come in at 152.35, which is the rising 20-day moving average. Only a breakdown below 152.35 may see further weakness to retest 151.50 next, the minor swing low area of 29th of October, confluencing with the 21st of October and 22nd of October minor swing lows. Only a push up above 153.90 will negate this bearish bias to see a retest of the medium-term pivotal resistance again at 154.50. So that's for the dollar yen. All right, so right now, let's touch on the very interesting movement on the major stock indices, starting with the Asia Pacific one, the Japan 225. So the Japan 225 also managed to fall, all right, created by negative feedback loop. But what's interesting over here is managed to shape a bullish reversal right exactly at the 20-day moving average over here, right, and very closely to our medium-term pivotal support level at 148.450. All right, 148.450. So if we do the Fibo retracement of this last impulsive up move from 10th of October all the way up to the current all-time high of yesterday, right, it constitute with the 50% Fibo retracement where it bounces right now, and the medium-term pivotal support level constitute confluence with the golden ratio of 61.8% over here. Okay, can't see, right? Let me push it down to the right side. So this was the left, right, right. Okay, so right, you could see it. So 50%, 61.8%, the golden ratio, right? That confluence with the medium-term pivotal support. So given this strong bounce that we are seeing right now, so this will be my short-term pivotal support level, 49,370. All right. 1,370. Okay, so this will be my short-term pivotal support level. All right, so view this movement, yesterday movements, as a noise. All right, not the start of a medium-term or major downtrend phase on the Japan 225 over here. So maintain that bullish bias for a potential recovery for today. Three key resistance level to watch as we stretch out into the European session and thereafter into the US session tonight. 50,090, 51,090, followed by 51,730. All right, so these are the three key intraday support levels to watch as we anticipate this potential bullish reversal on the Japan 225. Only a bearish breakdown again below 49,000. Okay, this is not 49.37, 49,370. Another another breakdown below 49,370 will negate this bullish reversal, bullish recovery bias on the Japan 225 to drift it down to test the 48,450 pivotal, medium-term pivotal support level. So if we hit this medium-term pivotal support level, I'll be on the lookout for bullish reversal candlestick again to flip my bias back into the boost, right? Given that this is a medium-term pivotal support, which is confluence with the golden ratio of that 61.8% of this last impulsive up move sequence from 10th of October low to the current all-time high that was printed yesterday. All right, so that's for the Japan 225. All right, maintaining a potential bullish reversal, bullish recovery scenario given the positive price action right exactly at the 20-day moving average as we're speaking right now. Okay, onward next will be the Hang Seng Index represented by the Hong Kong 33. So the Hong Kong 33 also bounces back up. Okay, so yesterday we have this pivotal support level at 25,760. So the way it bounced, also it bounced back up again. So there was this gap down at the start of the opening. Then this gap down managed to reintegrate upwards again, back towards this minor ascending trend line, right? That is still in play since the low of 10th of October over here. So this 10th of October is that Trump tariff tantrum, where he tweeted that he will increase additional 100% tariff on Chinese products. So consider this as a fake breakdown in today's Asia session over here. Okay, reintegrating back above that pivotal support that we have yesterday over here at this point in time. Okay, let me put it over here. Okay, so maps, let me remove this. So this shouldn't be my pivotal support for today. Okay. Okay. So I will use this 25,500. Consider this as a noise over here. So this will be my pivotal support, ST, short term pivotal support level. Next resistance level to watch on the very near term for today will be the 26,045, which is the intersection between the 50 and the 20-day moving average. A breakout above 26,045 will see a much more pronounced recovery to retest 26,310 intermediate resistance level. Next, only a sudden bearish reversal down below 25,500 will invalidate today's recovery slash bullish bias scenario on the Hong Kong 33 to drift down towards 25,290, 25,215, maximum the important 10th of October swing low at 24,920 next. Right, so that's for the Hong Kong 33. Okay, next up will be the Germany 30. All right, so the Germany 30 also see this bullish turn up again at this point in time. So this Germany 30, right, what's interesting over here, if I go to the 4-hour time frame, right, at this point in time, okay, let me remove the Fibo retracement first. Okay, since this is the all-time high, all right, so this is the 19th of June 2025 low, supported by this ascending trend line. So the way it evolves in this Germany 30, it seems to me that it's evolving in this kind of some ascending triangle range configuration. All right, so that actually explains the choppy movement in the last 2 weeks plus. Is still inside this triangle range configuration at this point in time. So with that, let me go down to the 1-hour time frame chart. So what I could see now over here is that the lower limit of this ascending triangle range configuration is at 23,450. We also confluence with the 200-day moving average as well. Okay, so some of us may say that it will potentially drift down to 23,450 before doing that much more pronounced reversal on the upside, given that that is the lower limit of that ongoing medium-term slash multi-month ascending triangle range configuration that has been in play since 19th of June this year. That means for the last 6 months plus, it has been trading in a sideways range configuration over here. But the story over here is that because of this bullish divergence on the hourly RSI, I have not a strong conviction because of the appearance of this bullish divergence to play this residual push down towards 23,450, all right, which is the lower limit, all right. And where it bounces, it also bounces an intermediate support slightly above 23,450, which is 23,600, which is the minor congestion area here of 26th of September, all right. So with that, I have a neutrality stance for now. Okay, let me flip to a neutrality stance first. Okay, this I remove it. Come on, let me delete. Okay, so neutral between 23,600 and 23,990. Okay, so neutral between 23,900, 23,990, pardon me, not 100, a bit of tongue twisting. So neutral between, you saw the 50-day moving average. I think that's a similar resistance level as well. And also that bearish rejection during the start of the US session yesterday, 23,990 and 23,600. Only a bullish breakout above 23,990 will see it drifting upwards towards the next intermediate resistance zone at 24,180 slash 24,270, which confluence with the 20-day moving average. All right, so that's for the Germany 30 neutral for today. All right, now let us now proceed with the US stock indices, starting with the Dow Jones Industrial Average, representing by the US Wall Street 30 CFD platform. So yesterday, the Dow Jones or the US Wall Street 30 fared much better, managed to see a higher low and right exactly at the 20-day moving average over here, and which is also our medium-term pivotal support area. So previously, we had a rather tight short-term pivotal support, it drift down and hit the alternative support level and coming now very close to the medium-term pivotal support at 46,740. So I'll be using 46,740 because it almost coming close to this level. And I also do not want to be outright bearish to play it down towards 47,740, given the fact that the hourly RSI has starts to see a very significant higher low as well over here. And if I were to do this higher low, and it's now approaching the 50 level mark, okay, about to break the 50 level mark as well. So given that signs of a short-term intraday bullish momentum seems to be seeping back into the US Wall Street 30. So hence, I don't want to use 47,255 short-term pivotal resistance level, play a push down towards 46,740. So I'll be looking for opportunity to have a bullish bias instead, given of the current technical configuration, which I shared with you guys earlier on. So using 46,740 as my medium-term pivotal support level, first resistance level to watch will be my upside trigger level for today, 47,255. That is also the high of the US session. A breakout above this level will see a higher probability bullish reversal, bullish recovery scenario on the US Wall Street 30 for today. For the next two resistance to come in at 47,460 in first step, followed by 47,750. Only a bearish breakdown below 46,740 invalidate this bullish reversal scenario to see a deeper corrective decline, exposing the next support level at 46,425, which confluence with the rising 50-day moving average. So that's for the US Wall Street 30. Next up will be the Dow Jones, next up will be the S&P 500. Okay, pardon me. So the S&P 500 did a lower low, okay, worse than the Dow Jones because of the higher concentration in the mega cap technology stocks. But what's interesting now is that the hourly RSI has started to shape a bullish divergence, indicating a slowdown of downside momentum. And it also reintegrate back above the 20-day moving average right exactly after a test close to our medium-term pivotal support at 6,720. So previously we have a very tight pivotal, short-term pivotal support, broke down, hit our alternative levels, and come close to our 6,720 medium-term pivotal support. So with that, I'll be using 6,720 as my medium-term pivotal support level. Rather hesitant to have a bearish bias for today, given the current element that we are seeing right now. And also at the start of my day, those I share with you guys, yesterday's sell-off is not centered on a systematic risk-off in the US financial markets, or not a risk-off triggered by a squeeze in the liquidity in the US financial system, because the banks outperformed yesterday and major US financial stocks managed to close unchanged, and also given major investment banking stocks, Morgan Stanley and Goldman Sachs, managed to close positively, all right, over here. So because of this element, everything I gel together, I'll be hesitant to have an outright bearish bias for today on the US S&P 500. So with that, I will have a recovery bullish reversal bias for today on the SPX 500 using 6,720 as my medium-term pivotal support level. Upside trigger level will be this range here, 6,830, 6,850, which is yesterday's US session high. Breakout above it will increase the probability of this bullish reversal scenario to retest 6,880. Next intermediate resistance in the first step. Only a bearish breakdown below 6,720 will invalidate today's bullish reversal scenario to see it drifting downwards lower towards the 50-day moving average, confluencing with the next intermediate support level at 6,660. So that's for the SPX 500. Next up will be the Nasdaq 100. So the Nasdaq 100 bounced off exactly at our pivotal, medium-term pivotal support level. So still recall previously we have a very tight intermediate, tight short-term pivotal support at 25,800, broke down yesterday, but hit our alternative levels and also hit the second support level after the break of that 25,800, the alternative scenario level, which is our pivotal, medium-term pivotal support at 25,200, which is the former minor swing high area of 10th of October and 22nd of October, where it previously has a bullish breakout thereafter due to that easing US-China trade de-escalation or trade tension de-escalation. So with that, and also we also have start to see a bullish divergence on the hourly RSI as well. So with that, I do not want to have a outright bearish bias for today on the Nasdaq 100, lower conviction on that, but instead I will have a bullish reversal bias instead using 25,200 medium-term pivotal support level. Upside trigger level will be at 25,570. A breakout above this level potentially seek out 25,800 next. So these are the two key intraday resistance level to watch. Only a bearish breakdown below 25,200 may see a deeper sell-off towards 24,090. Failure to hold at this level may see further weakness, exposing the next support level at 24,710, which confluence with the rising 50-day moving average. All right, so that's for the Nasdaq 100, and sum up all the intraday technical outlook on the major stock indices, as all of them continues to bounce off from relevant key support level as we are speaking right now. Right, very quickly now, the commodities market over here. So the commodities market, let us start with Gold XAU/USD. So Gold XAU/USD drift down lower as expected over here. Still can't break above that last Friday swing high. So it seems to me that it's now may retest the low of the previous Tuesday, 28th of October, 3,895, 3,864 over here. And also the hourly RSI has not flashed out a bullish divergence yet. All right, over here, despite a bounce off from the oversold level. So using this adjusted short-term pivotal resistance level, the lower limit will be at 4,036, higher limit will be at 4,062, which is much more closer to the 20-day moving average. Still maintain that bearish bias in any bounce below this short-term pivotal resistance zone, 4,036, 4,062. Intraday support level to watch, or first support level to watch, will be 38.95, 38.64. A breakdown below this level may see further weakness towards 38.25, 38 figure level, or 3,800 figure level on Gold XAU/USD. Only a bullish breakout above 4,062 will negate this bullish bias to see a much more pronounced rebound towards 4,155 next. All right, so that's for Gold XAU/USD. Lastly will be the West Texas crude oil over here. So the West Texas crude oil drift down and broke below a 61 figure level and almost hit our second support at 60.10 as it printed a low of 60.19 over here. So I will have a tightened short-term pivotal resistance for today, which is the minor swing high that's being seen on Monday at 61.70. So okay, so this one let me remove. So this will be the no longer my short-term pivotal resistance level. Okay, let me adjust to a proper one. So 61.70 will be my short-term pivotal resistance level. Maintain that bearish bias. First support level to watch out for today will be 60.10, which is confluence with the 20-day moving average as well. A breakdown below 60.10 open up scope for further weakness towards 59.15 in first step. So that's for West Texas oil. RSI continues to remains bearish below a parallel former ascending trend line and turns into a pullback resistance level. Only a bullish breakout above 61.70 will invalidate today's bearish bias view on the West Texas crude oil to see a squeeze up to retest 63 figure level, which is an important resistance level as well, given of its rejection that has been rejected on 8th of October and 24th of October. So only a bullish breakout above 63 figure level will trigger a more pronounced corrective rebound towards 64.55, maximum 65.70, which confluence with the key 200-day moving average. All right, so that's for West Texas crude oil. So that sum up the second segment of the daily dose, all right, which is all the intraday technical outlook on the global asset classes that we cover on a frequent basis. Now, before we go, let's have a quick look at the economic calendar to look out for what are the key data/events to look out for today. All right, so for today will be the Wednesday over here. Okay, let me expand my screen. Okay, so Wednesday, as we head down towards the European session, over here will be a quiet one, except for the start. After the start of the US session, we have tier 1 economic data to take note of. Will be not the start, this is actually a tier 2, but now become tier 1 because we know that the non-farm payroll data will be unlikely to be released this Friday given the ongoing government shutdown. So market will be looking at privately compiled statistics to have a gauge of the US labor market, the health of the US labor market. So we have the ADP employment change. So the ADP employment change, they have a slight variation from the non-farm payroll data because of the way they calculate is different. But given the fact that with the lack of the official compiled job data, so market will be looking at this formally tier 2 data as a scrutiny on the health of the US labor market. So ADP employment change released at 9:15 p.m. Singapore time today. Previously, it was have a negative outflow of jobs, negative 32K. But this time around, the market is expecting, or the consensus is expecting a slight recovery to 25K. So despite only a slight recovery of 25K, it's below the previous month of average of 100K job added in the previous couple of months. All right, so previously since February, March, April over here, if you do average and this spike of 104K, recovery of 25K is only minute compared to the previous month's jobs added. All right, over here, so not really that a great figure as well. Next up will be 11 p.m. Singapore time. So this is considered as a tier 1 data because ISM services PMI, given the fact that represents the health of the services sector in the US or the services industry in the US, and given that services activities in the US constitute close to 70% of GDP growth, or even 3/4 of the US GDP growth. So market is expecting improvement to 50.8 from 50 over here, and market will be looking at its subcomponent, the ISM services employment component, that is still in a contractionary mode last month at 47.2 to have a gauge of the health of the US labor market inside the services industry. And this is considered as a tier 1 forward-looking economic indicator. Why? Because this is a survey based. So ISM sent up a questionnaire to poll towards various purchasing manager within the services industry in the US to have a gauge of them, or whether they are expanding their business, including of hiring as well. All right, something to take note of. And next up at 11:30 p.m., so that will be more impact the West Texas crude oil prices, will be the weekly EIA crude oil stockpile change at 11:30 p.m. Singapore time. And as we head into the early Asia session tomorrow over here, we have a couple of Japanese data to take note of at 7:30 a.m. That will be the average cash earnings of the labor market in Japan year on year for the month of September. Market is expecting a 2% increase from 1.5% in the previous month. So if it came in above expectation, that could actually support the ongoing gradual monetary policy normalization of BOJ, where they aim to gradually increase interest rate in Japan. So that could further support further weakness in the dollar yen. All right, over here. And after that, we have 8:30 a.m. We have the balance of trade for Australia that could potentially impact the Aussie dollar and the Australia 200 CFD index. So that is the portion of the economic calendar. So other portion to look at will be the earnings calendar for today. So for today earnings, okay, let me very quickly, bring it over here. Okay, let's put it the higher impact one, 3-star. So I will share you there's another second tier AI related team play stocks in the US that could impact the movement of the Nasdaq 100 and the S&P 500 when the market reopen in tomorrow early Asia session. We have Qualcomm. So Qualcomm will report its Q3 earnings after the close of today's US session, which is after 5 a.m. today, Singapore time, PM over here. So Qualcomm will report its Q3 earnings. So that guidance from the management could potentially, and most importantly, if it's after results, price action could potentially influence the movement of the Nasdaq 100 and the S&P 500 in tomorrow's early Asia session when the market reopens again at slightly after 6 a.m. Singapore time. So with that, that sum up today's Daily Dose of Market Insights. Kelvin here signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.